Hello fellow traders, welcome to another episode. Thank you very much for your support. This is a tutorial video. Today we will see the Keltner Channel indicator. It's very similar to Bollinger Bands, Envelope, Alligator. It's another one that can show you how to trade in between channels. You can find all these indicators in my channel. It's not very popular. But we need to see all of them and analyze all of them, and this is the major purposes when we are doing a tutorial. It was introduced in the 1960s from Chester Keltner. Of course it got his name in the book How to Make Money on Commodities. Nevertheless, the origin is unknown. It was considered a common knowledge back then. Remember, we are talking about the 1960s, so actually there were not many commodities you could trade back then, and there was not such a much modernization that we have today. The Keltner indicator is another technical analysis indicator, but let's see the formula behind it. The original version was a middle line that was consist of a simple moving average of the typical prices with a period of 10. The typical prices, it's the high prices, low prices, close prices divided by 3. This gives you the typical price. The period of 10, we have analyzed that when we said about the moving averages. You can change that. By default, I'm giving you exactly the values from this indicator. Now this is a channel indicator, so we have also the upper channel line and the lower channel line. We also need to check the ATR. It's a measure of volatility. We will check ATR in another episode when we will analyze the relevant indicator. Of course, we will open live markets to check and see how this indicator, how the Keltner indicator works. Again, you don't have to know the formula. I have explained that many times, that all the indicators will be plotted automatically in the chart. Now let's go into a live market and see how this indicator looks. I have opened here the Keltner indicator on the Euro USD. You can see that it looks like a channel, like a river. This is our midline, the upper line and the lower line. By default, in this indicator, it's you can see the 3 most important values. The ATR length, which measures the volatility. I will make a separate video for the ATR indicator. Now let's change the value to, let's put it on 50. You see that it didn't change so much, it's just become smoother, and the reason is that we are talking about something that on a volatile perspective it won't change too much if you change the values. Even if you put 100, you won't see any significant difference. The most important part that you need to pay attention is the simple, the midline is the most important. The value of 10 is the initial line that the indicator started. Now if you put 20, you see that we have a significant change in values. By experience, I will say that many traders use the 20 line in the simple MA. And now another important value is the shift value, that it's a multiplier. I didn't put him in the formula. I don't want to make things complicated. There is no reason. Now if you put a 2-1, you see how much wider your river becomes. Based on the baseline remains the same, but the upper and the lower values are significantly changed. Now if you put a value of 5, let's say, see how big now our river is, huge. Impossible to make a trade. By experience, again, most people, most traders use the value of 2. If you put 2, you see that I have explained that, I have said that many times with indicators, and especially when you are using, you must be a bit creative. You see that probably the value of 2 is most likely to work. Now let's see how this indicator works and what it does. It measures volatility. The higher the range, it means that the higher was the volatility, the range of the previous prices. The lower the river, the lower in width, this means lower volatility. Now how we trade him? The original idea. Let's see that we have the baseline and the prices start hitting below, and now the prices hit our lower line channel. Now in this is a signal to go short. The price is close below, and this is a signal to go short. We open a short position, and as long as the line, the values, the prices remains at this range, even if they go a bit higher, we are still on good on our short position. But now the prices penetrates the signal. Now it's time to go out of our trade. The opposite. If we are trading on a long position, let's say, we'll see that the prices penetrate the upper line. So this is a signal to go open a long position. You can understand now why this indicator doesn't work. I have said that many times in many indicators when you are using them. So it measures volatility. You can use this indicator just to measure the volatility of the market. It will help you to understand when the market changes volatility. Most likely there is a change is coming to the prices. This indicator will help you a lot if you want to follow a trend. Many times I have said that in many videos. I do not trust indicators so much. It's good to have an example. It will help you when you have already identified a trend which builds a range. That's why we need also to discuss about the ATR, but we will see on a separate video. That's why I will stay on this indicator. Now you see that when the market was trending based on the previous prices, because this is what we are seeing here, you can also change the parameters if you want. You can use the 20 MA. It's very common in use also, the 20 MA. I want you to understand what is behind. I don't want you to memorize the numbers and the values. You need to play with indicators if you want to make a strategy that will work, or if you already have one, do not trust so much. But if you have identified a trend and you are already in a trade, so this might help you keep your trade if you don't want to cut it early, or if you want to take more profits from your trade, because you will see that if the prices leaves outside the range, it means that based on the previous prices, basis on the previous range, now the prices are going higher. So most likely the prices will reverse. But that's why I have opened a real market to show you that with this indicator, and like many others, most of the times you will have many false signals. Many false signals. Of course, someone can claim by using a different technique, a different strategy. Let's say that when the prices hit the mid channel, you can exit your short position, or when the prices hits the midline. Let's say that if you have a short position at this point, you enter the short position, you keep your short position, but when the prices start closing above, you are closing the position. You are not waiting until the prices hit the upper channel. This is up to you. In my opinion, of course, I've said that many times that we are still trading opinions. This indicator initially was created for commodities. Even though you can upload it in a chart, it's very easy to use. It's just another channel indicator. When the prices becomes tighten, let's say that if the river is not so wide, most likely the prices will jump at the direction. For example, if you have a market that is lagging. Most likely the prices will jump. And this is an example. You see that this was much wider because it was based on the previous prices. We had much bigger volatility, so the prices started to leave the center line, and now at this point the prices shoots up. Again, it's another hindsight in my perspective, in my opinion. This is a tutorial video to explain you how this indicator works. I hope you enjoyed the video. Trade safe, and I hope I'll see you in the future.